Hello and good morning everybody. Welcome to the Gold and Silver Club end of week review. Guys, great to see a lot of familiar faces on this morning's webinar again and some new ones as well. So for those of you who've been on the webinar before, you will know today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. So guys, for this live session today, we're going to cover an end of week summary for gold, silver, oil and commodity currencies. We are going to be looking at the top trades of the week. So we're going to look at live market commentary, what's going on right now. We're going to do some technical analysis. We're going to also look at the week ahead, key events this week, lots of news coming out later on this week, and also, of course, Q&A. Okay, so just a little bit about myself and Nick for everybody who's new to the webinar today. I'm Phil Carr, a professional trader, trainer and speaker, co-founder and director of the Gold and Silver Club. Now I specialise in teaching people how to make money from trading the biggest financial markets in the world. That's Forex, gold, silver and oil. I've trained hundreds of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club's trademark strategies that have a proven track record of generating returns for traders, and I'm a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops. Joining me on the call is Nick Kalsi, professional trader, investment analyst and speaker. And Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Nick is also the co-founder of the Gold and Silver Club. He spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through his first-hand relationships with some of the world's most successful traders that he's discovered the formula, mindset and tools that give any individual the definitive edge to make money in any economy. And he regularly writes for a number of global business and financial publications and appears frequently on television. So that's just a little bit about myself and Nick this morning. So here's us just actually in some recent publications. So here is the South African, here is International Life magazine and the Arabian, just some publications we've done recently. And this was actually an interview we did for Dukascopy TV just a couple of weeks back, just about our predictions for Q4 for the final 3 months of the year for commodities and gold and silver, which you can see on our website. Okay, so guys, we're going to get started, so we'll make it nice and interactive, and we'd just like to gauge everybody at the moment and just see what the gold price is this morning, see where we're at right now. So if you guys just want to have a look at the gold price on your charts, or if you don't know the gold price, feel free to have a guess of what the price is at the moment. Just get everything into gear. You should have a little Q&A at the side there where you can respond. This is where you can use, you can write your questions in as well. A little box so you can actually make it interactive. Yeah, spot on, guys. Okay, excellent. So we've had $1,712 per ounce. So yeah, that's great, guys. We've got obviously educated audience today. That is bang on. So yeah, Peter, good point there. We're pretty much at the same price as last week. Very similar. We've been basically gold has ended more or less flat, slightly lower than last week actually. But we'll go through that very shortly. Okay, great. And just looking at silver there as well, we're at $31.91 at the moment for silver. So it's $31 an ounce and 91 cents. So we're just going to look at the top trades of the week, and we're going to be covering just one of 5 strategies that we utilize at the Gold and Silver Club. So we're going to look at price action. And here we're going to go through the top trades of last week. So there were a lot of trades actually we took, but the top trades that we had, especially with some fantastic risk to reward ratios. You can see here this was New Zealand US dollar on the 24th last week, and this was a nice long position that we took. We had some strong support there. It was a Fibonacci level as well, which presented a very good risk to reward on the trade. and the actual risk on this trade was it was a very small risk required because the previous Fibonacci had bounced off the previous week with pinpoint accuracy, so we were looking for a very tight risk to reward. So it was a 15 pip risk, so trading at one lot, $150 risk on that trade, and we actually managed to catch a news announcement as well for New Zealand US dollar as well on this long position. We got to our take profit there. You can see the price action level that we actually came across. There was a previous level of resistance as well, highlighted in blue. It was 102 pips. It was a 6-to-1 risk to reward ratio, so you can see there $150 to risk to make $1,020, and you can see the move there just highlighted in blue. So that was on New Zealand US dollar. We had a very nice sell short actually on Australian dollar, New Zealand dollar last week. We had a strong level of resistance which hadn't really been breached for about 8 weeks or so. We came up to test that level again. It was also a Fibonacci level, so it was a level of resistance and a Fibonacci level. Again, fairly small risk on that trade. We had 20 pips on it. You can see the price poked above and tested that resistance level again. It couldn't quite make it. It couldn't quite break out from that level, and then we reversed and came down, and we reached our profit target, which in this instance was a level of support where the price is actually still being supported right now. It's been at that same price, just consolidating for about 3 or 4 days now, and so that was a risk of 20 pips there at we're looking at. So just got a question there, what time frame? So the time frame you'll see on there is a mixture. The screenshot will show you 4 hours, but it's a mixture on daily and 4-hour time frame. But that is a 4-hour time frame we've got there, Ray. Okay, so the reward on that was 84 pips. So from trading at one lot, obviously $200 risk for $840 profit on that trade for a very nice. So you should read 4-to-1 risk to reward ratio. But yeah, so it should be 4-to-1. Still very good risk to reward. Gold actually presented some interesting opportunities last week. We had the same trade set up 2 days in a row, which was pretty good. So basically the price came down to $1,700. We were seeing if we were going to get a test of $1,689, which was quite a key level. It was a Fibonacci level as well, but it was also a key level of support. We didn't quite come down that low. The price was supported by $1,700. This was you can see that it provided support the following day as well. The price, so the stop loss on that was just underneath the Fibonacci level below that. So it was slightly more risk than usual, but just due to the trade setup on the second trade there, you can see that we've taken the following day. We had exactly the same trade setup occur. So the price came down to 1,700. We actually got in the trade. We had GDP figures which are very positive for the price of gold and negative for the US dollar, and we saw that the price came back up again to test this 1,716. We got out fairly quickly, so the trade literally within a couple of hours we were in and out of this trade. So 120 pips risk from that to make 160 pips. It was about 1.5-to-1 risk to reward ratio on the trade. So you can see there at one lot where we've risked $1,200 to make $1,600, but it was a nice strong level of support that we had there, and we weren't looking to try and squeeze too much out of the trade. In fact, the price didn't actually manage to get beyond that on Friday's trading session, and you can see we're right back to sort of $1,710. So gold's looking to decide which way it wants to go now. Okay, so the next one we've got here is silver. So with silver, this was again on the same day we had the gold trade as well. We came down to a level of support, to actually a fib level again, and it was a level that's been supported pretty much all week. We haven't really broken below 31.45 all week. We tested that. It was the third test of that level on Friday. So fairly tight stop needed on that trade, 16 pip stop on that, so we got in just under the fib level, 31.63, and the price came back out to we had a level of resistance as well, where we've come up to test again around that 32.24. It was the third test of that level within a week, and the price actually didn't get much beyond that before reversing, so it was a quick trade again, just in and out. It was a trade that we took twice last week, both times very profitable. So 4-to-1 risk to reward, so 16 pip risk on that for 89 pips profit. 61 pips profit. We seem to have little mistake on there. So it was at one lot, so it's $610 that we had on profit there from $160 risk on that trade. And we'll show you that real time on the chart as well. Okay, so those are the top trades of the week, guys. There were quite a lot of trading opportunities last week. Although gold and silver were tending to just consolidate, we did have some quick trades that you can see there. So I'm going to take this across to my live screen and show you live trading where we actually got in and out of those trades. And we'll look at what trades are setting up at the moment. You'll probably notice there's quite a lot of news at the moment revolving around the Storm Sandy at the moment, so we'll cover that a little bit as well. Okay, I'm just going to show my desktop to you guys. Okay, so what we're going to have a look at first, guys, so we're just going to have a look at what we were talking about earlier. So this is the price. This is essentially gold that we've got here, and you can see here where we've had we're within a range at the moment. So we've come down, we tested that 1700 level, we've come back up, we tested $1,717 per ounce, and we're consolidating very much on gold at the moment. So at the moment we are interested to see if we're going to come back, test this support level again, $1,700 per ounce, or if we're going to be able to break out from these fib levels here. So you can see 1721, 1727, interested to see if we're going to either get a breakout to the upside, or we're going to have another test of the 1700 level, or if in fact we're going to come down and test $1,688 per ounce. Now, guys, you're probably going to have some questions during the live analysis here. We can't actually, Nick will probably be helping me, assisting me answer those questions. I won't be able to see your questions just whilst I'm going through the live charts, but I'll answer those straight afterwards. So on gold at the moment, yeah, we're very much consolidating. You can see actually if you go to the dollar index right now, we have come up to a level of resistance again on the dollar index. Several times we've tested that, and we've come up with a doji, which is where the market essentially it opens and closes at the same price, and we've had that almost 3 days in a row now, from Wednesday, Thursday, and Friday last week. So we're watching the dollar index closely. Obviously, if the dollar index does begin to go to fall sharpish off this resistance level, we will start to see gold and silver rally to the upside. If the US dollar index breaks out to the upside, we will start to see gold and silver come down and retest those lower levels. So very interested. Right now there's not really a lot on at the current price where it is 1,711. We want to see if it's going to break to the upside or downside at the moment. Silver, okay, so looking at silver, you can see here where we've got this level of support we've been looking at. So it was around about 31.63, which you can see where we actually entered the trade. This trade occurred on 2 occasions where you can see where we've had the trade come out of that trade, and then the second opportunity was on Friday, and we haven't managed to break above there, so it was a quick in and out trade there on Friday, literally in and out of that trade in a couple of hours. So that was just taking it from 31.63 to 32.24 on that trade. And you can see where this level of this Fibonacci was actually offering fairly strong support at the moment. So going back to August last year, you can see where this level provided support previously. So you can see silver's working very well off price action at the moment. So now we are interested to see if we're going to either break down from this level, and we're going to start coming down towards a 31 level, or we're going to be supported at this level and we're going to come back, and we're either going to test this 32, sort of 22 level later in the week, or we're going to come back up and test these levels of support, 33. So at the moment, just consolidating. You can see there's not too much action going on. It looks like New York Stock Exchange is going to be closed this afternoon as well. So I don't know whether we're going to get much in terms of volatility during the US market this afternoon due to the storm. So we could just continue to consolidate. So we're very interested to see if the price is going to come back down to 31.63, test these levels of support, or whether it's going to bounce off these levels and come back to the upside. You can see pound dollar at the moment. Actually, I tell you what, we're going to move on to commodity currencies, keep it very specific to commodities at the moment. Okay, we're very interested in commodity currencies, guys. I'm sure a lot of you have been on our previous webinars know this already, but essentially commodity currencies, they tend to mirror gold and silver. So what you'll tend to find is that New Zealand dollar and certainly New Zealand dollar and Australian US dollar, they do correlate to gold and silver. So where you will see gold and silver rallying, you often see New Zealand US dollar and Australian USD rallying as well. They move differently off different price action levels, so sometimes you'll get a bigger move from something like New Zealand dollar, US dollar than you will off gold and silver. And often when they're selling off, you may get a better opportunity in terms of risk to reward to take a sell short position off New Zealand dollar, US dollar than you would off gold and silver. And USD Canadian dollar, it moves exactly the opposite direction. So here you'll see when gold and silver are going down, you'll see USD Canadian dollar will be rallying, and when gold and silver are rallying, USD Canadian dollar will actually be going down. So we pay close attention to commodity currencies because of their correlation. So right now, you can see I've actually drawn this a little bit earlier. This level of resistance we've got here on New Zealand US dollar. So we're just going to go through, we're going to have a look at this at the moment. So you can see the actual trade setup that we had last week. We came down, we tested this this level of support here. Came down to a price action level as well. And then we rallied, we actually broke, we had some news as well for New Zealand US dollar on, I believe it was Thursday. Wednesday, or I think it was Wednesday evening actually, and we actually managed to jump on that trade, and we took advantage of the news. And we got to our take profit level. We weren't trying to squeeze too much more out of the trade after we'd made 100 pips on that trade. But you can see here we've now got encountering a level of resistance for New Zealand US dollar. So interested to see whether we're going to turn around now, come back and retest these levels here, or whether we're going to start consolidating, continue to consolidate and go on a next leg higher for New Zealand US dollar. So at the moment, yeah, very interested to see if we're going to break through these levels of price action. Australian US dollar, we had some nice trades on Australian US dollar. You had to be kind of quick to get in and out of these trades last week, but they weren't presenting as good risk to reward as some of our other trades. But you can see here at the moment, it's consolidating again. We're just moving between these sort of levels here. We're just moving sideways at the moment on Australian US dollar. There's nothing really on at the moment. What we'd be interested in at the moment to see if we're going to break out of this level of resistance later on during the week, or if we're going to come down and retest these levels of support. Price action as well, but these levels of support down here. So right now, as with most of the markets at the moment, fairly quiet. There's not too much on there. USD Canadian dollar. So we actually broke out to the upside last week. You can see where we were quite range bound. We've actually broken out from these fib levels. We're coming up. We're going to get a test of this level. Let's have a look what this is. This is going to be 1.0014. So interested to see if we are going to have a test and if we're going to get a reversal from that level. Now this is of course going to depend on what gold and silver are doing as well. So if we test that resistance level at the same time that we come down on gold and test 1700, we could potentially see either a breakout to the upside of USD Canadian dollar, in which case we may see gold and silver break down further and come and test key fib levels on a breakout USD Canadian dollar. If USD Canadian dollar just comes up to this resistance level, this price action level, and it halts and then reverses, if it starts just to come down, you would expect to see then a support on gold and silver, and also a rally to the upside in those markets. And you can decide which would obviously provide the best risk to reward on those trades. Not a recommendation, it's just price action that we're going to be looking at. Okay, so we're going to just quickly cast our eye across to crude oil now. So we're just getting some reports through that update crude oil below 109 as the hurricane shuts refineries in the US. So we can see we've come down. We've actually just a whisker away from testing that 108.43 level. We have actually come down from crude oil in the last week, and this whole area here has been supported around about 108.43 level. This has actually provided some support back in September. You would have needed around about 75 to 100 pips risk to actually stay in this trade. we've had quite a few bounces off this level, and then we've come back to rally, and we've retested 113 on each of those occasions. At the moment, we're just moving sideways, so we're consolidating. Bit of a choppy trade at the moment. I mean, we're moving back and forth between this 108.43 level. We're back above it again at the moment. We've come below it, come as low as 106.50 and as high as 109. So really looking to get some sort of direction in crude oil at the moment, either expecting some sort of support at this level and a rally back towards 113, or we're going to get a breakdown. And if we do get a breakdown, the next level down is quite a way away. It's 103.72, where we haven't really got a lot of, if we break through this 106 level, we haven't really got a lot of support here until we come down and retest this 103.72 level here. So right now, moving sideways on crude oil, again expecting, I mean, tonight is going to be very, very telling. Obviously, we've got a lot of news coming out of America at the moment. Well, a lot of news just regarding what could potentially happen with the storms. So if you don't know already, I'm not sure how much exposure you guys may have had to what's going on. If you're watching the news, you probably would have seen this. If you haven't, I'll quickly go through this with you. Okay, so essentially there are evacuations and shutdowns in the US East Coast at the moment before Storm Sandy. So it's actually Hurricane Sandy. I'm just reading, we've got Thomson Reuters live news feeds here. I'm just reading this off what they've posted this morning. It's become the largest storm ever to hit the United States. It's set to bring much of the East Coast, including New York and Washington, to a virtual standstill in the next few days. About 50 million people are in the path of the storm. Let's have a look here. Okay, so New York and other cities have closed down transit systems, and they've also closed, the stock market in the US has closed on Monday, which hasn't actually happened since 1985, and possibly Tuesday. So the operator of the New York Stock Exchange said late on Sunday they are reversing their plans to keep the trading floor or the electronic trading open, so that's all going to be closed today. So we're going to be watching that really closely, guys. We know I was actually trading during the tsunami, which occurred in Japan in 2011. So I was having a quick look. We know what happened. I don't know if you know what happened to the indices there, but we had some very sharp falls in indices. So what you can see at the moment, the Nasdaq, if the stars hit, I mean, even the market's being at an absolute standstill at the moment, so obviously not a lot of work is going to be getting done if everything is on gridlock right now. We're starting to see that affect the indices. You can see the Dow Jones, which is coming down at the moment. You can see that the S&P 500. So we'll be looking at that, monitoring that closely, guys, and what effect that may have. Obviously, this is going to cause bearish outside market, especially for the US, and the effect that that may have on the US dollar index. So guys, definitely one to watch this week and keep an eye on. What we did see last time during the Japanese tsunami is that essentially this was at a time when gold and silver had got to quite high points, and what we found is with external markets selling off due to that a lot of positions within gold and silver were liquidated due to capital which needed to be raised. So we will be watching potential downside risk on gold and silver this week if this storm does really get out of control, as positions may need to get liquidated. So something to keep an eye on in terms of the news there. But we're going to cover key economic news as well. So that's it, guys. Cool analysis there. We're just trying to keep it nice and focused to gold, silver, oil, and the commodity currencies. And we're going to talk about live news coming up. Okay, so other than obviously the storm, which you want to keep a close eye on if you are in positions there, especially if you're in equities there, and also it's going to affect the US dollar index, which is going to affect currencies, because obviously all the US dollar is the world currency, and you want to world is a reserve currency. You want to keep an eye on that, how it affects other markets. So other than that, on Tuesday, tomorrow at 1:30 p.m, want to pay attention. European Central Bank President Draghi is speaking. So following the EU summit that resulted with no real big headlines, we want to look at this speech. Might refer to the future monetary policy steps of the ECB and the actions that should be taken to deal with the Eurozone debt crisis. speech might affect the euro and commodity prices as well. Often when ECB President Draghi does speak, it does affect the euro, and that obviously moves gold and silver quite significantly as well. What you tend to find is if there's euro weakness, you will see gold and silver go down. If there's euro strength, you will tend to see gold and silver go up. That's the correlation at the moment. So on Tuesday, we also have Bank of Japan monetary policy statement. So that's the press conference, looks at the factors that affected the most recent interest rate decision and the overall economic outlook, inflation, and offers insights in the future monetary policy decisions. So we want to keep an eye on that. On Wednesday, for those of you who trade USD CAD as well, we've got CAD GDP, which measures the annualized change in the inflation adjusted value of all goods and services produced by the Canadian economy. It's the broadest measure of economic activity and the primary indicator of the economy's health. So a higher than expected reading should be taken as bullish for Canadian US dollar, while a lower than expected reading should be taken as bearish. Important news because obviously CAD is also correlated to commodity prices. We also want to keep an eye on this week, actually, is because obviously Friday we have US non-farm payroll. We go on to that shortly. Thursday, some news coming out. Want to keep an eye on US initial jobless claims. So this is the initial jobless claims, measures the number of individuals who filed for unemployment insurance for the first time during the past week, and it's the earliest US economic data that we get before non-farm payroll, and so it does it varies week to week how much effect this has, but it does tend to have an effect on the US dollar index. So a higher than expected reading should be taken as bearish for the US dollar index, which means it will go down, while a lower than expected reading should be taken as bullish. We're also looking at the US manufacturing index. That's the Institute of Supply Management, which measures business conditions including employment, production, new orders, prices, supply deliveries and inventories. So on this index, a level above 50 indicates industry expansion, and below this indicates contraction. So why do we care about this? Okay, so we care about the manufacturing index because a positive reading should be taken as positive for the US dollar, while a lower than expected reading should be taken as negative for the US dollar. And of course that's correlated to gold and silver. And also Friday, so the big news is you can only really trade one announcement this week. You want to keep an eye out for US non-farm payroll. That's going to be Friday at 1:30 p.m. Huge announcement for the markets. It always affects the markets massively. It measures the changes in the number of people employed during the previous month, excluding the farming industry. So it's called US non-farm payroll. It doesn't include those who are employed in farms, but measures everybody else in America. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading, i.e. if more people have become unemployed, should be taken as bearish for the US dollar. So always a big market mover on Fridays, first Friday of the month at 1:30 p.m. Okay, excellent. So I think we're just going to, as we get towards the end of the webinar, guys, we definitely encourage you, any questions you want asked there, do post them at the end. Also, guys, as we get towards the end of the webinar there, if you'd like to find out about more about our strategies, obviously we're just covering one of 5 strategies we utilize at the Gold and Silver Club. If you'd like to find more about those, you can simply go to Learn How to Trade on our website at www.thegoldandsilverclub.com. We've got a whole array of tools, and you can fill in an application form there. You can also get our free weekly newsletter, so we send out all the latest news, similar fashion to what we've done on this webinar. You also get invites to webinars like the FX Street webinar, where we cover the live market analysis, news looking forward, and also top trades of the week. So you can just simply go to that on our website and you'll see the tabs for that. If you've got any questions at all, would like to find out more, please do email us at office@thegoldandsilverclub.com. That's office@thegoldandsilverclub.com. Or you can telephone us on our office number at 0207 193 0403. That's 0207 193 0403. I would just like to, it's great to see a lot of familiar faces. We've got some of our Gold and Silver Club traders on the call as well. So we'll just quickly acknowledge some of you guys, and please feel free to put some questions through. So great to see a lot of you on the call. So great to see you, Eddie, Ingrid, excellent to see you guys, Ewan, Darley, Taka, and some of our regulars, Peter Adams. And we've got Thomas, Frank. So good to see you guys on the call. Really look forward to. We're going to be on same time next Monday covering live market analysis. If you've got any questions at all before then, do get in touch either on our landline or our email address there. Okay. Excellent. Okay, no problem, guys. So getting a few thanks through. You're absolutely welcome. We're coming on to 10:30 now, guys. So if there's not any additional questions, you've been a great audience as always, and we really look forward to speak to you again same time next Monday. Okay, guys. So we'll speak to you then. Take care. Bye bye, and good luck with this week's trading.